Hello again, everyone. Welcome to the new trading week, beginning on 6/23 and ending on 6/28, where we are going to talk about our projections for this week based on our technical analysis. So before we begin, let's just pray as usual. God, we just thank you again for your blessing and for your goodness. And we ask that you will be with anyone watching this video. May it be instrumental in helping them and helping all of us to be successful on our journey. We thank you and we love you. Amen. All right, guys. So for this week, as you know, I have gone ahead and I've drawn my support and my resistance lines. For those of you who need help drawing your support and resistance lines, please check a previous video that I have posted with how to properly draw your support and resistance lines. Um, as you know, um, my bias um, is going with the trend. And as you know, the NASDAQ 100 is an historically bullish pair, which means it buys from the higher lows and it terminates on the higher highs. Now, again, in order to pick up those higher lows, you have to go on your biggest time frame, on your bigger time frames, pick your higher lows there, and then buy through to your higher highs. All right. So let's jump right into it. So last week we saw that the volume was low towards the middle part of the week due to the fact that we had the Juneteenth holiday. There's also something that happened last week in the markets called triple witching, which means it's every third Friday of every month where a number of securities have expired. And as a result of that, it creates increased volume and volatility in the market. So I'm just going to put on this indicator. I don't use it much, but just to show you what we're talking about. So if you look at this volume indicator, this is in the middle here where you had that Juneteenth holiday. And if you look at the volume indicator, you'll see volume was extremely low for these 2 days. Okay. And then it started picking up towards Thursday in London session, which you saw the market actually take that dive to create higher lows on your bigger time frames. All right. So if you look at previous weeks, you see volume has been pretty steady for previous weeks. Um, but you see here where it was extremely low for over these extended period of time for these 2 days before it actually started picking up, in line with the triple witching phenomenon. If you're not familiar with it, you can just go on Google, just type in triple witching and you'll get a explanation, a detailed explanation about what it does and how it affects the market. All right. So going back to what we have been looking at. So if you have been following the NASDAQ for any length of time, you'll see that this is actually a bullish instrument. Okay. It does not mean that there are sells that do not come in the market. But if you look at it, it is predominantly bullish, which means if you went in from the inception of NASDAQ, you could have been in the NASDAQ right through and still be in profit. Okay. How do you achieve that? All that simply happens is that you have to make sure that you're going in on your biggest time frame that makes that higher low, and then you're trading it to a higher high. All right. So for last week, what you'll see here is right at, this is Monday, Tuesday, Wednesday, Thursday, right at Thursday in London session, the beginning of London session, you notice the market has started to sell from this point. Okay. The market has started to sell from this point. Now, what that means is that you will basically notice that this new low that has been put on your 2 hour actually translates to a higher low on your bigger time frames. Okay, I'm going to check that in a bit. Okay, what I want to show you is this is a new low. The word low signifies a new low, which means it's a new low in relation to the last low. Okay, so this new low right here is higher than the last new low that was made back in on the 31st of May, 2024. This is on the 2 hour time frame that we're looking at right now. Okay, so that tells you that the market is making higher lows, higher highs. Now, if you take a trend line and you draw from that low all the way to this low, okay, that tells you the story right here. It shows you the market is in an uptrend. Okay, however, when you look at your bigger time frames, and like I mentioned to you guys, I watch all my time frames. Okay, so if you look at your 3 hour, you'll notice on your 3 hour that there's a higher low. Okay, so which means is that the biggest higher low, I still got to check. So when I look at my 4 hour, I see also that my 4 hour is at a higher low. So what I want to do is I want to check all my time frames up the line until I identify that time frame that has the biggest higher low. Okay. The biggest higher low was registered on my 11-hour time frame. Okay. Why is that significant? Well, for a number of reasons. The 11-hour time frame um, created this higher low at on the 4 a.m. candle. Okay. Now, the 4 a.m. candle, of course, you would not go in for a buy at 4 a.m. right there. Okay. What you want to do is you wait it until the candle would have been finished. And then you check your smaller hour time frames and you'll notice that that 4 a.m. Candle actually terminated at the lowest point, which was about 9 a.m. So from 9 a.m. on Friday, this market has been trying to buy. Okay, it made a lower high. Okay, came back down, got some resistance, and it started buying again. And this is how the market actually ended on Friday. Okay, so my biggest time frame that made a higher low is my 11-hour. And if you look at the trend on the 11-hour, you zoom out, you'll notice that the market has been making higher lows, higher highs. Here we go. Made a lower low here, a lower high, then it made a higher low, then it made a high, new high, which was higher than all of these. Then it came back, it made another higher low right here, and then it eventually came up to an all-time high. Okay, came back down. This is now the biggest higher low, so you're expecting the market to go up and continue a higher high. All right. Now, the other thing that you want to do is you want to make sure, like I said, you check all your time frames. So right now, this is my biggest active time frame. When I look at the time frame, let's say like the 5 hour, if the market is making higher lows, higher highs, which we see here, okay, this new low is higher than this lower low. Okay, this new low is also higher than the previous lows that it has made. Okay, this high, although it's not a higher high, notice this high is an all-time high. Doesn't get any higher than the all-time high. So which means this is essentially a higher high because again, it's higher than all of these lows. It's at an all-time high. So which means the market is in fact making higher lows, higher highs. All right. So that's one of the reasons why last week I held my trade that I was holding from, I think it was Tuesday. All right. Held my trade. This was my entry line. This is my entry line right here. Of course, it retraced. It came all the way down here. Guess what? I'm trading the trend. Okay. Which means at some point in time, the market is going to come back and break this line and put me back in profit. Okay. Again, let's look at it. I've shown you this example, a number of times. Let's look at um, let's take any low, for example. Let's say I took this low, okay? And I came up, did a higher high, which is similar to what I did last week. Came up, it made a higher high, didn't take my profit, came back down, it made a low, came back, I'm in profit, came back down, I'm in the red, and then it continued going up, up, up. And although it came down and made another lower low right here, notice this lower low is even higher than where I would have entered over here if that were the scenario. So which means the trend is definitely going towards the upside. Okay. The flip side of that, okay, is also true. Let's say I came in for a sell. Let's say I took a sell right here, this higher high. Came down, I'm in profit. Came back up, I'm in profit. Came down, I'm in profit again. Okay. Notice what happened. It goes up, I'm in the red. Comes down, I'm in profit. Goes up, I'm in the red. Comes down, I'm in the red. Goes up, I'm in the red. Comes down, I'm still in the red. Goes up, I'm in the red. Comes down, I'm still in the red. Goes up, I'm still in the red. Okay. So a number of times, number of weeks before, what used to happen to me was I would go against the trend and overthinking, overanalyzing, and saying, okay, fine, I expect price to come back down to this support area. Okay. Well, what always happens to me is that I'm expecting price to come here. Price does not come here. Price just kept going. Okay. So I've learned my lesson from that. Never try to go against a bullish trend. Don't try to go against the trend. Always trade the trend and you will be fine. The trend is your friend. That's it. Okay. It's no use trying to be smart. No use trying to go against a market that is clearly showing signs of being bullish. You always want to make sure that you're trading with the trend. So, of course, that is why I'm actually holding my buys because I know the trend is strong. I know the market is historically bullish. So, quick review again as we look, you'll see your biggest time frame that made a new low is actually your 2 hour, and your biggest time frame that made a higher low is actually your 11 hour. One quick point that I want to make to you is that the reason why I know the buys will resume is that on Friday, your weekly candle expired. What does that mean? Guess what? If Friday comes, the end of the week, the end of the trading session, the weekly candle expires, expect a retracement in the opposite direction. Even if it's going to sell, expect a retracement towards the upside. So candle expired right here, and you will see it. You actually saw it. This 4 hour candle with that, which actually translated to 1 hour candle on at the 9 a.m. hour, you'll notice you have gotten rejections. Okay. When I look at my 2 hour, which is the biggest candle that made that new low, you'll see clearly a rejection that happened here. So let's say, for example, I took a line, a horizontal line, and I drew here. Okay. Notice price came. This is where it stopped. Price tried to buy up. Okay. Came back down, respecting this line. Close the week on a bullish note. Okay. How does that translate to my biggest time frame that made a higher low? When I go to my 11 hour, you'll notice right here, this 3 a.m. candle, 4 a.m. candle. This is where it came. Notice that rejection that was right there. Okay. You actually had that wick body finished above the wick. Then you had a bullish candle that formed on top of the wick, sorry, on top of the line, okay? And the body completed all the way up here. So, for example, let me take these lines off so you'll see it. Notice this is where the line would be. Notice what happened? Body formed above the line, finished above the line. Okay? All right? So that's a sign to tell you that you're going up to seek for that higher high. Now, worst case scenario, what if you don't go up to make the higher high? Okay, well, if you don't go up to make the higher high, what you're looking for, you want to see what type of highs are made on your biggest time frame. Look for that expiration, okay? Look for expiration time within, like a session close, like a daily close, whatever it is. But you want to get that high point before you actually exit. All right, so that's what you're looking for. So my key for next week is that since my 2-hour was my biggest time frame that created a new low, and I'm getting this rejection right here, what I'm looking for is to see the type of highs that my 2-hour is making. If my 2-hour comes up and makes a segmented high, which means it comes up and it makes a lower high, then a higher low, then I'm looking to exit on the break of where my high would be. So which means it would, let me use a tool to show you. So it would come up, it would make a lower high, then it would come back down to make a higher low, okay? Right here, in this area, right here, okay? This break line would be where my take profit would be. So it would come up again from this higher low, and then as soon as it breaks this line, boom, my take profit would be hit. That's where the high would be, because now that would mean that that new high would be a lower high in relation to this last higher high. So I would be expecting more sell sides if this scenario actually happened. All right. Now, let's say it does not do that. All right. Let's say it goes up and it creates a direct move high. Now, if it goes up and it creates a direct high, it means the price would actually have to come and break this line to put on a new high. If that happens, that tells me that the trend is actually active and it's ready to continue buying. Okay? So segmented high tells me take my profit at my high, and now I'm waiting for another low in order to continue up. Direct move towards the high side tells me that, okay, fine, the trend has resumed, the trend is strong. Guess what? I am staying for my buys. All right. So that's pretty much it for next week. I just hope that we have a wonderful and successful week. Like I mentioned to you, my biggest time frame that has that higher low is in fact my 11-hour. Okay, it expired on the weekly, so I'm expecting the trend to continue. Okay, and of course, my 2-hour is my biggest time frame that made a low. I'm expecting it to continue going up, but I'm watching to see what type of high is made. If it makes a segmented high, I'm taking my profits, and then I'm waiting for that low. Okay, and once I get that low, then I'm looking for it to actually continue going in the direction of the trend. One other thing that I want to mention real quick is it can actually put on a lower high, which would be very high, you know, uh, in this manner. Okay, if it puts on a lower high within the London session, guess what? It's still above my entry line. Guess what? You know what? It doesn't hurt to take your profits and wait. Even if it pushes afterwards and goes up and makes the higher high, guess what? All I'm waiting for now would be a higher low to continue with the trend. So there's so many options that you have um, in order to trade once you're going with the trend. So it's just a matter of making sure that you are trading with the trend and you're not going against the trend. All right. So I hope that this video will be very insightful to somebody who's watching and for all of us. Um, Remember, number of things, cover your profits. If you make your profits, take your profits, hold on to them, wait for another entry. All right. Once you have your profits, that's money in the bank. Okay. But also remember, take this information that I'm giving you and use it to help you to develop your own strategy that you're comfortable with. Okay, I'm just sharing what is working for me. Okay, in order for it to work for you, you have to make sure that you understand it, practice properly. Don't just come on here and rely for people to give signals and everything. Remember, everybody's trading style is different, everybody's broker is different, everybody's leverage is different. So you want to take all that information and help you to develop a strategy that works for you. So thank you again for watching. I hope that everything will go well for you this week and that you will have a wonderful trading experience. Thank you very much. And please look out for additional videos, additional updates as the week goes on so that we can all learn and trade and earn together. Have a great one, guys. Bye.